No, but business credit is what I wanted to talk about today. As you know, we focus on helping people get the most out of their corporation or LLC. And one of the ways we help people do that is by helping them build business credit. And business credit is very different from personal credit. The rules are different.
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie, Calls on Call Extraordinary Answering Service, as well as the Bold Business Book. And today we're welcoming / preparing to learn from Michael Wedaa of Augmentus Business Solutions. And Michael, we're hitting a lot of things here, but business credit, I believe, is the main one. So let's just start out with, what is business credit?
Great. No, first off, James, it's great to spend some time with you again. It's been a while since we last chatted, but
It has, it's funny. I'll just allude here a little bit. YouTube is moving into shorts and all that jazz because they're trying to compete with all the other social media things that have short videos. And so we just got fancy software, whatever, to find shorts. And it's interesting because some interviews you're like, there's a handful. And yours, it's like, ba-bam, 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 ba-bam. All good stuff. So I'm so happy that we have you on here a second time because
well, good. No,
now we
thank
get
you for
more
that. I
content
appreciate
for
it.
the masses, right?
That's right. That's right. No, but business credit is what I wanted to talk about today. As you know, we focus on helping people get the most out of their corporation or LLC. And one of the ways we help people do that is by helping them build business credit. And business credit is very different from personal credit. The rules are different. The way you build it is different. And you asked me what is business credit, and business credit is credit that is tied to the EIN of a business. And that comes in two forms: personally guaranteed and non-personally guaranteed. The personally guaranteed credit is where you would put your social security number up as a business owner, and what you're doing is you're guaranteeing that debt so that if the business can't pay it, then it transfers over to you as an individual, and it makes the banks feel good that they have that second route of recourse, really. And then the non-personally guaranteed stuff, if you can get your business credit score up high enough and get your profile looking good enough, there are banks that will give you credit lines without being tied to your social. So what's great about that is that if you have trouble with your business and you need to shut it down and bankrupt the company, all they can do is take the assets in the business. So it's important to know when people are applying for business credit, what's personally guaranteed and what's not. And really, the best way to say it is that in most cases, if it's a major signature bank like a Chase or a Wells Fargo or a Bank of America, 9 times out of 10, it's going to be a personally guaranteed account if you're going for a credit card, right? And that's not a bad thing. All it does is it shows an inquiry on your credit. But if I got a $25,000 credit line tomorrow from, let's say, Chase, all it would show is an inquiry on my personal credit. It wouldn't show that my business got awarded that $25,000 credit line. And if I maxed it out tomorrow, it would only show on my business credit profile, not on the personal credit profile, because it's simply a personal guarantee. It doesn't show up as an active account on the personal credit.
Oh, interesting. So you do your Experian or whatever they are, you wouldn't see that card listed as either available credit or debt that you have there.
Yes. Because if you max out a card on the personal side, you get dinged in a big way. Your score tanks, right?
Huge.
So that's what's great, is that the only way your credit gets dinged is through that initial inquiry. And then if you default on the debt, it will then report on your personal credit score. But if you're just maintaining the debt and it's fine, only thing you're going to see is that inquiry. Everything else will remain incognito on the business profile.
Interesting. So the credit bureaus, right? There's 3 of them. Is that right?
Yep, that's right.
Experience the one that's top of mind, but I'm sure there's other 2. I can't think of their names.
Yeah, there's Equifax, TransUnion.
There we go.
Yes, there you go. Those are the 3.
From the business side, is it still those 3 companies, or are there different companies?
There's 2 that are the same. There's Dun & Bradstreet. That's the biggest one. And then there's Business Experian and Business Equifax. Those are the 3 big ones. And then they dig into LexisNexis a little bit and a few other smaller ones, but the big three are Dun& Bradstreet, Business Experian, and Business Equifax.
All right. So I remember way back when, we're talking mid 2000s, I had opened up my first business and Dun& Bradstreet sent me a letter saying, "Hey, if you want business credit, you have to pay us a nut or a monthly nut or something like that." And I was just a small little, I don't know if I had 2 employees, something like that. It was one of those things where I'm like, why would I pay you to have business credit? I don't need any business credit. Is that still a thing? And if it is a thing, tell us about that thing.
Yeah, it is a thing. So here, you don't need to pay Dun& Bradstreet, even though they will tell you that you need to. You can call them and ask them, say, I need to get a free DUNS number for verification purposes only. That's the keywords. And they are going to go, oh, we don't know what you're talking about, or no, you needed this, or it's not going to do any good. The person on the phone gets a commission for marketing their monthly plan, their annual plan, right? And so they're going to tell you, they're going to fight you tooth and nail to say you need to pay, this $50 a month, or you need to pay $250 for the access for the year. And you just hold fast and say, nope, I need it for verification purposes only. I'm not using it for anything else. And eventually they'll capitulate and give you your DUNS number. And there's some free services where you can go in there and actually enter your information, your company information into, you build out your own report. James, that's one of the biggest differences with personal credit from business credit is that you have to go set up your business credit profile, where on the personal side, you go get a card and it also gets set up automatically. You don't have to go in there and physically do it. So one of the key differences is that. But yes, Dun & Bradstreet, go get your DUNS number, get it for free, don't pay for it. The only time you want to pay for it is once you've gotten a few credit lines, you want to make sure they're reporting properly. That's the one reason to go maybe purchase a one-time report. Or if you're really active, then do the monthly plan. But when you're getting started, no need to pay them at all.
Interesting. So tell me a little bit more, because the personal side, everybody's got a credit report, whether you want it or not, right? They're keeping
Yes.
track of all the debt, assets, liabilities that you have, and all that kind of stuff. They're doing you a huge favor, keeping track of all your
Yes.
numbers.
Yeah. Yeah. Doing you a huge favor,
For the
right?
business side, you actually have to tell them that what you have going on.
Yes. Now, sometimes if you get particular credit products, it will report and they'll generate an Equifax number for you, an Experian number, or even a DUNS number for you. But if it's not reporting, you have to go in there and request a DUNS number, and then go in there and enter your company information, all the state of incorporation, the date it was incorporated, the business address, all the information that needs to be added. And that's a key thing here. That's one of the things we teach people. Our company, when we work with people on business credit, we put them through 50 fundability factors before they apply for their first credit line. And one of the factors is getting the address right. If your address is your old business address with the Secretary of State or with the IRS or on one of the credit bureaus, there's an algorithm in a lot of banks that will give you an automatic denial. And so there's these silly little mistakes. Maybe it says suite number instead of just number sign for the, suite number. That'll get you kicked out. And they don't have to tell you like they do on personal credit why you got denied. They just go, sorry, we denied your application. So you're going to keep trying and you're going to look at your business credit report. Everything looks good. And it might be because your address is off in some way with either the state, the IRS, or with one of the business credit bureaus. So, it's important to know there's these little nuances that will get a business, even if it's a strong business with a strong personal guarantor, that it'll get automatically denied for reasons like that.
And is there some way to check that or verify
Yes.
that or
Yeah, you can
double
go to your
check?
Secretary of State website and look, is the address up to date? You look at your last tax return that was filed by your CPA, it'll have your address listed there. That address that's on that is the one that is used by your CPA. CPAs will copy and paste. So if you don't tell them that you moved, they're going to use the address from before, and that can cause a problem for you. But here's an interesting one. Phone number. Nobody has a landline these days, right? You and I remember those days where we had a landline. If you're doing business from your cell phone, even if it's in the business name, it shows up as a red flag on your business credit profile. So you need to get either a landline in the business name, or you need to get a voice over IP. And the reason for that is it shows up as a business line and it automatically reports to the National 411 directory. And that makes the banks feel like, okay, this is a legitimate business. It doesn't have that fraud flag. So you could have a multi-million-dollar business, and if you're running it from your cell phone, then it'll get flagged as a cell phone business as opposed to a landline or voice over IP.
That is interesting. It's interesting you say that because so I have a call answering service, and the
Mm.
number of businesses that we reach out to, they're like, yes, we want call answering service. That they have the owner's cell phone is also the main line for their business. It
Mm.
is, and we just did, we signed on a graphic design company. I think they had 15 employees, and the owner was about to go on vacation for the first time in however many years. And she's like, how do we do this? And I'm like, you get a new cell phone with a personal number and you share that with your mom and your friends. But outside of that, that number is now your business number. And it was so interesting because you could just see the fear on her face. I'm like, okay, this is going to be a pain in the butt initially. But once you go through that pain, the business number doesn't change, right? So that's just the business number. Your
Mhm.
personal thing changes, but think of all the freedom that you're going to now have. And
Mhm.
it's interesting because after a couple weeks of her like, she finally did it, and she's like, it's amazing. I went on
Yeah,
vacation and nobody bugged me.
that's great. And as a business owner, whether you're on vacation or not, you shouldn't be so available. You need to
No,
delegate to a team like that. Even when you're home, but especially when you're on vacation. You and I both
absolutely.
know about that because we both like to travel a lot.
Yeah, I don't want to be in some restaurant hanging out, meeting people and stuff like that. And then like, oh, I got to take this call from some customer or employee or something that can actually wait, but because I'm too easy to get a hold of, they're
That's
going to bug
it.
me.
Yeah, that's it. You got it right. You got it
Yeah,
right. So that's
interesting.
a phone issue. One more thing I just want to cover because there's 50 fundability factors. So I'm just giving you the top two or three here, if that's okay.
Yeah,
The other one is address. Most of us, we do business from our home, and that's great. We don't need an office. It shows up as a potential fraud flag on a business credit profile if it's a residential address. So, two ways to solve that. One is get a virtual address. There's companies like Regis and things like that where you can get for anywhere from 25 to 60 or $70 a month, depending upon your locale. You can get a virtual address where when they Google it, they see this big office building and you actually have, you can have mail go there if you like. But what that does is it makes a more robust business credit profile. The bank's like, okay, this is a legitimate business. It's a commercially zoned address. So we're more likely to give them a better interest rate and a higher credit limit. The alternative is if you know a lot of people in business, you can say, hey, if you have a warehouse, one of your friends or one of your clients has a warehouse or an office somewhere, you say, can I use your address? No liability comes on to them for that. It's just they might get some mail here and there. That's really it. So if they're willing to let you do it, that's another alternative, a free alternative. But then you get to list it on your business credit profile as an actual commercial address, and you have your phone number set up, and you're going to take care of a lot of issues there as far as avoiding those automatic denials when you apply for credit.
that's awesome. One of the things I want to talk about the address a little bit. I was trying to verify something. I don't remember if it was a Google business profile or something, but it asked for a utility bill. And I'm like, I don't have a utility. Like I rent. I don't have a utility bill in that business name at this address. Like it seemed to me like they were treating it like it should be your house, right? You get your gas bill or whatever to your name at your address. This is you. But I was thinking when they were asking for this verification thing with the address, the business name on a utility bill, I bet there's a lot of businesses that don't have any utility bills that come directly to them. So I wonder how they get around that.
So they are starting to get a little more liberal with that. And so a utility bill is one of the options. Now they will let you, not everybody, but a lot of banks will let you use an invoice from one of your credit companies, right? So if you have one of your business credit lines going to the address, you can show them a statement that shows that, or a bank statement, or some other, it can be a business license that has the address on it in some cases, right? Or a lease agreement, that would also work if the utilities are covered by the landlord. So they're starting to catch on to that, hey, just because I don't have a utility bill here doesn't mean, if I'm subletting from someone, they're not going to let me put my name on the utilities, right? So
Right.
banks are starting to wisen up and give us alternatives for that.
Gotcha.
Mhm.
So what do you typically see the businesses that are applying for credit or going through these things? Are they going through that in anticipation of needing loan or funding of some kind? Or is this something you recommend people doing even if they're not necessarily looking for a loan just to prepare that they might? sometime in the
So
future.
we get people always come to us when what I call when it's too late. When they need money and then we have to start the process from ground zero. So I think it's better to have the money available when you don't need it, right? Because a bank is someone that'll lend you money when you can prove you don't need it.
That's
So you don't want to get
exactly
in
right.
trouble and then start applying, right? So it's good to have it ready to go. And it gives you options. There's a lot of business expansion opportunities, or maybe there's an investment deal that comes up. It's good to have that what I call dry powder available, money available to use. That's why I like credit lines over loans. You get a loan and don't have a need for it, you're going to be paying interest and making payments on money you don't need. Credit lines are great because it just sits there available and you only pay interest on it when you use it. And we have a lot of 0% interest products where they have an introductory period for 12 to 18 months. So that's really great for, people who are investing and or purchasing a business or purchasing a piece of equipment for their business. It's a really good option.
Yeah, you raised an interesting point. I should shift gears here a little bit and ask, what all does Augmentus do?
So we do the best tagline, the catch-all that I use is that we help people get the most out of their corporation or LLC, right? So that includes consulting, which entity is best for you, LLC, S corp, C corp. It includes setting up the entity for the business. We help people move their assets from their personal self to the business. But one of the key ones we do is we show people how to legally transfer up to $250,000 of personal expenses to the business. Right? Yeah. So that's one of the big ones. Is like, okay, let's transfer some of your personal vehicle expenses over. Let's transfer a portion of your mortgage over to the business. Let's even if you're funding your kids' college education or your kids' retirement, or maybe purchasing a car, or maybe saving for a down payment on one of their houses in the future, you can transfer that to the business. You can transfer retirement investments over to the business. So there's all kinds of stuff that you can transfer to the business. And that, along with the business credit, are some of the ways that we help people get the most out of the corporation or LLC that they set up.
So tell me, you named a lot of things there. Let's
Mhm.
start with the one you mentioned, let's say kids' college. Let's start there. How do you move
Yes.
that to a business expense?
So, people who have children, and it works typically with kids that are around age 8 to about 20, right? The key is they can't be working full time elsewhere, right? So that's why when I say 20, that's, typically kids are working at that point. And the first $15,000 that any individual makes is tax free because that's the standard deduction, right? So if you have two kids, you can have the business pay them up to $15,000 a year tax free. And if you want to pay them more, let's say you want to pay them 25, that additional 10,000 is only taxed at 10 or 12%, right? So taxes are minimal. So you can have kids do filing, you can have them do janitorial work. They have to be doing something. If they're older, they can do data entry or some more, skilled activities. But what happens then is that it goes through payroll and transfers over to the child, and you have control over that money. You can either just give them that money and let them spend it, or put it away for them to save for something they want to spend money on, or you can parlay it and put it into an IRA for them, right? Or you can put it into a fund where you're like, hey, listen, as you work and do this stuff, I'm going to buy a car for you in 5 years. And so what's happening is you're making that eventual car purchase for the kid or college or whatever you want to call it a business expense because it became an expense through payroll over to the child tax free, and you can help the child, with whatever you want to help them with, but you're transferring that expense over to your business, which is a really good way to do it.
That is amazing. I just learned this, I want to say last year and a half ago, something like that. And it was because I got a big tax bill. So I start
Mhm.
poking around online, finding how can I knock this down. The accountant
Mhm.
that I had was just a numbers guy. I gave him the numbers. He entered them and told me a big number that I owed.
Yeah.
And I asked him, like, this is crazy. What do we have for options for knocking this down? And he was
Yeah.
like, make less money. And I was like,
Yeah.
yeah, what else you got?
Yeah, that's not an option. What else you got?
So then I remember asking him, I'm like, can I hire my kid? According to the internets, I can hire my kid. And he's like, yeah, you can do that.
Mhm.
So I hire my kid. He cleans an office and stuff like that once a week. He does little odd jobs. I am running conduit and stuff like this. And I learned, I'm in Wisconsin. So I learned from a better accountant that I have now that the national number is 15,000, but the state was 12,000 something before they have to file a return.
Mm-hmm.
So to avoid filing a return, I just pay him that 12 grand or whatever it is. And most of it, I just stick in retirement for him because he doesn't need thousands of dollars.
Yeah, right.
I don't know what he'd do with thousands of dollars. It would probably make me angry if I learned what he'd do with thousands of dollars.
Yeah, right.
We'll just set you up. You'll hate me now and then thank me in 40 years when you don't have to work anymore.
That's right. Yeah. But that's what you did. You transferred your child's retirement over to your business, that expense. You transferred it over. Yeah. So it's good that you did that. And it's funny. I find it hilarious that you found it and not your CPA. And that's the issue, is that we're teaching people challenge your CPA. You know what I mean? Take these things to your CPA, ask them these questions. CPAs hate me. And what's funny is they always want to challenge me. I say, look, I'm not looking for your job. I'm a business consultant. I'm just trying to help my client and giving them some options. So, I like putting CPAs to work because they like to do the copy and paste and file the return, and they're not really looking for any other tax stuff. It takes the client looking stuff up and ask him, oh yeah, you can do that. Well, why didn't you see Mr. CPA tell me that I could do this? Why did I have to find it?
Right. I had the same thing. I asked about segmented depreciation. And he was like, you could do that, but there's an expense, right? And I'm like, okay. So I went through that whole thing, ended up saving quite a bit of money on that.
Mm-hmm.
And it's one of those where I don't know if I'd say I got pushback from him. I got, I'm going to call it lack of interest.
Yes. Yeah, a lot of times you get you can do that, but that, or, oh, you don't want to do that. A translation for you don't want to do that means I don't understand it.
Fair. Totally fair. Nailed it.
Yeah.
Tell me a story about, you mentioned the mortgage thing, writing off part of your mortgage as a business expense. Let's go down that road.
So a lot of people, this is one that a lot of people are aware of, but it's writing off the office space or having your entity pay rent to you as an individual for the office space. And a lot of people do that incorrectly. So one of the ways is they don't capture all the space. If I have a bedroom in my house that's an office, I can write off the entire bedroom, right? If the bedroom has a bed in it and I just have a desk, I can only write off a portion of the bedroom, right? So that's one of the ways people screwed up. But a lot of times people have storage in their garage, right? Or storage elsewhere in the house. You can also add that square footage as well, right? So the key is to figure out what is the total cost of your mortgage, and you write off the percentage of that, total square footage. But what I like to do is I like to figure out what the market rents are in the area, because typically that'll be higher than what a mortgage is, especially if you've had a mortgage for 15 or 20 years, right? So I look at the market rents for a bedroom in the area or for an entire house, and then I take a percentage of that. And it allows my company to pay me rent money from my corporation to myself as an individual. And because it's passive income, it gets taxed, it's tax advantaged, right? Earned income is taxed the most. So that's a way for me to subsidize my housing expense by having my company pay me rent for the storage in my garage, because I got books and boxes there. I have stuff for when I speak at seminars. A lot of my setup stuff is stored in my garage, plus this office in my home. Those are all, I add up the square footage and look at the local rental rates, and I raise the rents every couple years. So my company pays me more on the rental side for that every year.
So, and is that the company cutting a check to you?
Yes.
Or are you setting up an LLC for your house or something like that?
No, the company cuts a check to me, and then I pay the mortgage out of my personal account. Yeah.
Gotcha. Okay.
Yes.
And that money, that rent payment, isn't treated as income, so it's essentially tax-free.
It's treated as rental income, and that's taxed differently. So you're avoiding payroll taxes and all the other stuff on that as well. So yeah.
Does that end up as a 1099 or something like that from your business to you?
No, it's on a different schedule of the 1040 for the individual. So, and then the business gets to write it off as just rent, which is great.
Okay.
So that's the way, because it's rent for the business, you get to write it off from the business, and then that's the way to cover a portion of your mortgage. And I bought my house so long ago that the rent that my company pays me for my office, it puts a positive cash flow into it's more than what my mortgage is now.
Oh, nice. Okay.
Yeah, I bought this house 26 or 27 years ago. So my mortgage is very small compared to that. Now, if I
Right.
bought a house today, that would be different. It'd only be a small percentage of what the mortgage is, right?
Yeah, real estate's changed a bit in a couple decades, right?
Yes. Yes, that's right. That's right.
So let's just say for fun, keep it around numbers. The rent's $1,000. So
Hmm.
$1,000 expense from the business side going to you, and that $1,000 a month shows up on your 1040 as passive rental income or something like that.
Yes, correct. That's exactly right.
And
Yeah.
so is that tax just as your typical tax rate, or is there where there's FICA and all that kind of stuff coming out of there? Or that's
There's
different.
no FICA. That's what's great about it is passive income, like rental income, you avoid FICA. So you're just paying your normal, whatever your tax rate is on that. You're paying that. But what's great too is that you get a lot of deductions from renting out your house. You know what I mean? You get to deduct a portion of the utilities, a portion of the housekeeper, a portion of a lot of different things. So even and you're deducting your property taxes and things like that. So uh, it really ends up being a good way to transfer money without, and FICA is 15.3%. So you save money right off the board right there. So it's really
Yeah.
good.
Yeah, FICA's insane. But that's
Yeah.
it's interesting when I'm talking to my employees about their hourly rate and then the burden rate, what every
Mhm.
employer has to pay on top of that.
Mhm.
They're like, just because you're making $20 an hour doesn't mean that it's costing us as business owners only $20 an hour to have you.
Yes. Workers' comp, you got your half of the FICA taxes and all. Yes, it's crazy.
Yeah, the
It's
insurance,
expensive.
the hiring, the firing, all that kind of stuff. Like it's a lot of
Yeah.
money.
Yeah. Yeah, that's right.
I
People
met a
don't realize.
guy, I met a guy that was just on his own as a handyman, and he's charging $30 an hour to do handyman stuff.
Oh, okay. Wow. Okay.
And I'm like, dude, you're crazy. You you
Yeah.
gotta double or triple that at least.
Yeah.
He's like, what? I was making $20 an hour where I was before. Now I'm making
Yeah.
30. He thought he gave himself a huge raise.
Yeah. Yeah. That's right. He didn't catch that he wasn't.
I don't, I mean, check your math, buddy. At the end of the year, when
Yeah.
you're doing your taxes and stuff like that, just come back and tell me I'm wrong. I hope I am. I don't believe I am.
Yeah. And the FICA tax is double when you're self-employed because you're the employer and the employee. And a lot of people don't
Yeah.
get that.
Yeah.
So
It's
it's
crazy.
split when you're working a W-2 job for somebody.
Let's I want to talk about LLC and S corporation and C corporation stuff. I know we touched on it at the last in podcast interview, I don't know, a year or two ago, something like that. It was
Hmm.
pandemic time way back when.
Yeah, that's right.
But let's talk about that really briefly, pros, cons, what you recommend for people just starting, and if there's ways to transition or reasons to transition.
Yeah, so any entity will work. C Corp, S Corp, LLC, any entity will work for any business. People tend to overthink it. The only thing that comes up is you might be leaving some tax dollars on the table. Now, my general advice for people is start an LLC, and there's two reasons for that. One is it's less formal. You don't have to, with corporations, you have to document every major action, even if you're the sole owner of the corporation. You have to have a meeting with yourself and record meeting minutes and create corporate resolutions to open a bank account or to obtain business credit and get a loan or to sign a lease for an office. It's a pain, right? LLCs are not required to do that because they're a less formal entity. So there's a lot less paperwork. That's reason number one. Reason number two is that LLCs are the most versatile. So that means that I can have an LLC taxed as a sole proprietorship, a partnership. I can have it taxed as an S Corp if I choose to. I can have it taxed as a C Corp. So what's great about an LLC is that as I grow and I want to say, tell the IRS, hey, look, I just file a form and say, I want you to tax me like I'm an S Corp. My legal structure is an LLC, but I'm putting on a jacket that says S Corp on it, meaning tax me like that. And if I start making so much money that I want to, get taxed at the C corp rate of 21%, I can file another paper that says, hey, tax me like a C corp now. I'm still the legal structure of an LLC, but that's what I mean by an LLC being the most versatile. It gives you wiggle room to move around as your business grows without having to shut it down and start a new entity, right? So that's usually the way to go. There's times where you do want to start a corporation. If you're going to bring on a bunch of investors and there's a different, and you're going to go that route, you want to go the more formal route with, in some cases. Or if anything that requires a license, there's some states that require you to have what's called a personal service corporation. So if you're doing therapy stuff or if any medical stuff or or even some real estate stuff. If you have some sort of a license, they require you to have a personal service corporation in some states. So, people who are performing those types of services need to be aware of that an LLC is not an option in some cases. But in general, the LLC is the way to go. Easiest to maintain, gives you the most options.
Awesome.
Yeah.
Tell me, let's shift gears a little bit into protecting assets. LLCs come up in protecting assets. And I understand you're somewhat of a guru when it comes to that.
Yeah.
So let's just start with the basics as far as things that people may not necessarily understand about things that they can do, including LLC, to protect their assets.
Yeah, so there's a lot of ways to do it. And so when you the reason people form an LLC or a corporation is to protect their personal assets if they get sued in the business, right? So if someone sues you in your business, they can only touch what's in the business itself, the business assets, the bank accounts and such. It's difficult for them to pierce the corporate veil and come after your home or your investments or whatever it is. But there's a way to protect yourself. There's some advanced stuff that you can do to protect your personal assets in case you get sued on the personal side using your business. Okay. Before we were talking about business credit. And so what I have people do, build up some business credit. If you get yourself a big credit line, let's say you get yourself, a $50,000 credit line. If I get several of those, let's say I lend my business lends me, the individual, $300,000. What I do is I then have my LLC act as the bank and they put a lien on my home. And the reason for that is that protects the equity of my home. So if I have a mortgage, that's first position lien. And let's say I have a $300,000 in equity that's just sitting there waiting for someone to take if I get in a car accident or they slip and fall on my property. What they can do is they sue you in court. If they win, they put a judgment on you. They can put a lien on your property. But if your property is all liened up, it's all spoken for by the bank that has your mortgage and by your business because you lent $300,000 to yourself, then what happens is that if someone sues you, they're in third position. So if you sell your house, there's no house left. So they get screwed, right? But so that's an advanced tactic to protect your personal assets. But now if you want to get really crazy, that $300,000 in business credit that you lent yourself, you take that money as an individual and lend it back to your business. Don't pay off the loan, lend it back to your business. And if your business has vehicles or real estate or any type of other asset, you as an individual now put a lien on those assets that the business has, so that if you get sued in the business, those assets are spoken for. And when you lend that money back to the business, it can pay off the credit lines, and then those go back to zero. And you have these two ghost notes or ghost loans. Even if you were to pay it off the loan to the business and you forget to take off the lien, nobody knows that. So if you got sued, say, here's the note, the promissory note that says that money was lent. You can show the transaction and say, that's why there's a lien on the house. And then they go, okay, great. As long as you do it before there's trouble, before you get sued, then it doesn't look like you're trying to hide assets. So you want to do it before you get in trouble. And then that makes it hard for a judge or a opposing attorney to challenge the transaction.
Gotcha. That's right. The homeless people don't get sued, right?
Yeah, that's right. Yes.
They always go after the people with deep pockets.
Become homeless.
Yeah, right. Tell me, so you want to loan money from your business to you and then from you to your business. There must be some paperwork involved.
Yep.
So I imagine you can't just write in crayon or something like that.
Yeah, you want to do a promissory note, and that actually shows that there was a loan. And if you can prove that there's a transaction, that helps too. Some people will do this technique without doing a transaction and say that they lent the money. That's harder because, if you get sued, a savvy attorney is going to say, show me the transaction, show me the paperwork, and it'll stand up. That's why it's always better to have some sort of a money transfer or write the check and hold it there for a little bit. And then you can, pay it back in different payments if you want. It doesn't have to be a $300,000 check and $300,000 check. It could be $300,000 check, $25,000, $50,000, $100,000 to kind of break it up. That looks a little better. But yes, if you can show that paperwork, the promissory note, along with the actual bank transaction, it's going to be a lot better for you.
Gotcha. So you are actually transferring money or moving it from business to you and you to business.
Yes, because a lot of people don't have 300 grand sitting around. That's where the credit lines come in, right? So
right,
that helps you. That helps you a lot.
Gotcha.
Remember, earlier we were talking about creative uses for business credit. That was one of them. Was the asset protection being folded into business credit. So that's a good option for it.
And is a promissory note just a piece of paper that says promissory note on it?
Yeah, it just has to be a legitimate agreement that has, an interest rate, payment terms, all those different things, and that's what you have to you can pull one of those off the internet. Doesn't have to be recorded anywhere. It doesn't have to be notarized. It just has to exist and be ready to be shown.
How would a creditor that was searching your stuff see that there was essentially a second lien on your house?
So if you're trying to refinance, or if you're trying to get a HELOC or something, or an equity loan, they would ask. So you'd have to pull the lien off the property, do a release of lien, so that they could put their first position lien back on, or put the second position equity loan back on, and then you file the paperwork to become third position if that's the case, right? So you take the lien off so that they can be what they need, and then put it back on. Creditors have no idea that you have a lien on your house unless you're trying to get a mortgage. Like they won't see that. If you're applying for a credit card or a car loan, they don't see that exists. It doesn't affect them. But they're going to run a search on a property if they're going to lend you money on a property, because they want to make sure they're protected with their lien, and that they're one of the first position holders. So that's what you got
Okay.
to figure out.
I'm just thinking you get in a car accident and you hit somebody in their Bugatti. In that Bugatti, they had $10 million worth of diamonds that got scattered and lost. And they also had their grandma that was a brain surgeon that was making 2 million a year, something like that. She got killed or injured, right? She can't earn money, but she's still in the hospital, kind of thing. Like worst case scenario for you to get in a car accident.
Yeah.
And the attorney people that want to sue you say, we're coming after you for $50 million. And we can see, let's just say your house is paid off, or
Mhm.
or you owe $6 on your house. Your house is worth $1 million. How do they see a lien on there that's saying like, hey man, you got to stand in line here because I got other liens stacked up here?
So what they would do is the attorney could look it up and see that it was leaned up, but what if they're smart? What they'll do is they will, if you have a mortgage in first position and then your business promissory note is in second position, right? What a good attorney would do is they would get the judgment and put a lien on the house anyway, right? So if your house is $1 million and it's all leaned up from your business and your mortgage, they're going to put it on for more than the house is worth, because chances are the individual's not going to sell that house today. They might sell it in 10 or 20 years. And what that does is it ensures, probably appreciation is going to happen, or at least they'll get something. It might be a $50 million lien, but if there's only 200,000 left over after they sell that house, they'll get 200,000 sent to them, right? So if they're smart, that's what they'll do. But the key about having the house cleaned up is that they look and say, this person has no assets. Then the attorney's going to tell them, look, you're going to spend all this money to go after them, and there's nothing to go after, right? So it can help from that perspective. But filing a lien is not that expensive to do. So if it's a lot of money, then it's worth doing it, even if the house is liened up. But it is going to scare away some attorneys that are trying to sue you.
All right. So you file a lien. Who do you file a lien with?
Typically, it's with the Secretary of State, or sometimes it's with the county, depending upon where you're located and where you live. But that's they basically record the lien is what they do, and there's a form that you fill out, and it
Gotcha.
tells who the lien holder is, and all that. So it's a fairly simple process, but you can also hire someone to do the paperwork for you. It's a few $100 maybe you could get someone to do it.
Okay. Simple enough. Let's keep going down the road of protecting assets. What are some other things people can do?
So a lot of stuff that I tell people to do is to have multiple corporations or LLCs, right? I work with businesses where they have a lot of expensive equipment, right? Maybe they have expensive sound equipment or things like that. So what I tell them is, let's say you have $150,000 in equipment or vehicles or whatever it is, and they house it under one business. Well, the business that's front facing, dealing with the customer, has the most liability. So what I tell them to do is form a separate LLC that owns the vehicles or the sound equipment or whatever the assets are. And you rent that equipment to the LLC that's signing the contract and performing the service. That second LLC that's signing the contract with the customer, what it does is it owns no assets other than what's in its bank account, what its bank accounts are. And so if ever that LLC gets sued, it's like, okay, you can have the $2,000 that's in my bank account. And if you're keeping your balances low because you want to keep that liability low, right? And they go, well, what about your vehicle? Oh, we rent that. That's not ours. You can try and go after them, but it's not ours. And they'd have a hard time trying to go after that vehicle unless the vehicle was in an accident. That would be an issue. But in the case of sound equipment or other assets, it's very difficult for people to take rented equipment. So it's a way to add another shelter over that in addition to insurance. People always tell me when I speak at these business events around the country, oh, well, that's what liability insurance is for. And that's when I say, what is the number one job of an insurance adjuster? To figure out a way to not get you paid. So
Yeah.
this technique helps protect you in case that happens.
Yeah. Insurance always seems like you're paying for a promise that you don't want them to have to keep, and they have no interest in keeping.
That's right. Yes. Yeah. It's definitely a racket. I've had insurance pay out in certain instances and I'm happy, but I've had them also not in others. And I just love when, I want to get into the business where you pay even if they don't provide the service.
Right.
That seems like a genius business to get into.
Oh my gosh. Yeah. So I'm in Wisconsin. There's a bunch of insurance companies around here. I remember driving past the Acuity headquarters, and it's amazing. It's beautiful. No expense was spared. And I was like, that's what you get when people just pay you and you don't pay out.
That's what's up. Exactly.
We didn't get rich writing checks, right?
Yeah, it's crazy. But James, another asset protection technique that's fun that ties into business credit, I think you'll like. Do you invest in real estate?
Yeah.
You do. Okay, good. So this is for the real estate investors. If you get business credit from your LLC and you get some of these 0% products for 12 to 18 months, whatever. If you buy a property using business credit, there's no lien on the property because it's not a mortgage loan, right? So if you buy a property with business credit money, as long as it's not owned by the same LLC, and let's say several years down the road something goes bad and you have to bankrupt this LLC, it would be very difficult for the bank to come and try and take that property, because if you lend it out to another company or to you as an individual and the transaction was far away from the date that you actually got into trouble, it'd be very difficult for them to come take that property. So that property, you'd essentially own a property that would be technically paid off, even though you have this business credit debt. And if you rented that property out, you could use that money to service that debt. But technically, you could go get a new mortgage on that property, and now you just double that and you go buy another property with it. So using business credit to purchase properties without liens on the property, that's a really good way. I call that an asset protection technique, in that it's difficult for the bank to come take that property, and it gives you the opportunity to leverage it again and go purchase another property from there. So a lot of fun stuff you can do there with business credit and asset protection married together.
I got to try to wrap my head around this a little bit.
Yeah.
So the business credit that you're using is credit from a business that you own, or is this business credit from a bank?
No, it's business credit from a business you own. But gotcha. It's a credit line issued by a bank to your LLC, right?
Gotcha.
And so, if it's a credit line, a lot of times they provide you a check that you can write. So I could write a check to myself as an individual, or to the seller of the property, right? I'd probably want to separate it out and not make it like the business is purchasing that property. I'd probably write the check to myself, maybe do some loan paperwork that's off the books, and then go buy that property. And then I have a property that's paid off. Even though there's this debt, I service the debt from the rents, the business credit line debt, right?
I see what you're saying. So you're essentially getting a line of credit for ABC LLC.
Yep.
And it's just a line of credit. The bank doesn't care what you do with it.
That's right, as long as you pay it.
Here's your whatever $500,000 line of credit. You take that $500,000, you pay cash for a property.
Yep.
So that property is essentially paid off through a loan.
Yes.
You can rents on that property, using those rents to pay the business loan that you have, that line of credit.
Yep.
But there's no actual lien on the property.
That's right.
Oh,
so you could go pull money off of that property if you wanted, and then rinse and repeat, right? So it's kind of cool.
Oh, so you could borrow against the property that's fully,
because it's free and clear. That property is free and clear. And so as long as you're being responsible and you pull money off of that to buy another property, now you have two rents coming in, and you have two appreciating assets that are, you have them appreciating on that side, plus rents usually go up over time. So it's a good way to kind of jumpstart your real estate investing game.
That is pretty clever. That is very clever. Yeah, I'm impressed, man.
Business credit is fun. If you know how to play the game, business credit is fun.
You know, it's so funny that you mentioned the word game because I was joking with someone after I found out about all this. I'm going to say a fraction of the tax opportunity that we have to not overpay. And I'm like, this seems like I'm playing a game of Monopoly, but
Mhm.
only, let's say the instructions are split up in 100 pieces, and there's 100 people that have one piece of instruction, and they're all scattered amongst the entire population. And you have to try to dig to find out all the rules of the game, even though we're all still playing the game.
Yeah,
So
yeah,
it's interesting. You almost have to look at like it's kind of fun, even though
yeah.
sometimes you end up overpaying in taxes grossly.
Hmm.
And I don't know, you just discover the ways to protect yourself, limit your liability,
Hmm.
pay less in taxes, all that kind of thing. That's super
Yeah,
cool.
yeah, yeah, that's right.
Tell me, I wanted to ask you because you're the LLC guy. Tell me a story about Delaware LLC, Wyoming, Nevada. I think there's another state that seems to come up when you dig up LLCs.
Those are the big three. Let's go through them quickly. People think Delaware is great. They think they're going to save taxes there. They're not. Delaware is a normal tax. It's not bad. It's not great. It's not low. Delaware's good for, that's why a lot of the bigger companies like Coca-Cola and things like that, they're good for asset protection. And the reason is they have their own corporation court, right? So what that means is that if it's a business lawsuit, they have their own court that specializes in business practices, and they tend to favor the business, right? So there's states where the business is the big bad evil rich guy, even if it's just a mom and pop business. And so if someone slips and falls and they're obviously, they're represented by an ambulance chaser, they'll still win in some states. In Delaware, they're more fair and like I said, they err on the side of the business. So that's why the larger corporations will incorporate there. For the small business owner, I don't think it's necessarily the best option because then you'd have to qualify your corporation as a foreign corporation in the state that you're actually doing business in, and that can now you're paying fees in two different states, right? Wyoming and Nevada are great because for privacy, they don't share a lot of information with other states, so that's the first reason. Second reason is that they are no tax states, so that's great. I like Wyoming better than Nevada because Nevada got smart. So many people were forming Nevada corporations and there were zero taxes. Their fees are so high that their fees alone are about $1,000 a year to maintain an LLC or a corporation in Nevada. Just the fees. And hey, that's great because you're not paying taxes over there. That's cool. So if that makes sense for you, then it's still a good move. But you can do the same thing. It's $60 to maintain an LLC or a corporation in Wyoming, right? And then plus if you need a registered agent and things like that. But Wyoming's a favorite for that reason. But I always tell people it's better to form the LLC or corporation in the state in which you're doing business because that state will require you. They think, you can't, just because Wyoming's a no tax state, you can't avoid taxes if you're doing business in California, even if it's Wyoming Corporation. They'll still come after you. They'll figure it out. They trade information with the IRS. And so I've had that happen where California calls me, we want our cut, right? So it's good to usually form where you're doing business. If it's a property in a different state from where you live, it's okay to form an LLC where the property is located. But a lot of people think they can avoid their state tax by going to Nevada or Wyoming, and that's not always true.
Gotcha. Tell me, you mentioned registered agent, and agent is just something that I learned about a little while ago. So help me out with what is a registered agent?
Every business has to have an individual that can accept a lawsuit summons during business hours, right? Now, you can act as your own registered agent. If you're operating from your home, you can just list your home address and put yourself as a registered agent. There's people for privacy reasons, or maybe they're not in their office all day long. They will hire a registered agent. And so what it is it's an address that's in a commercial space where the desk is always manned with somebody, right? And so if someone's trying to sue my company, they go to that registered agent office and hand them the lawsuit summons. And everybody has to have a registered agent. They just don't have to have a professional paid one. They can act as their own. So obviously, if I'm opening up a Wyoming company, I'm not living there, so I have to pay someone to be able to accept that, right? Typically, the cost is $100 a year, somewhere in that time frame. If you buy multiple years, you can save money on that. But for privacy reasons, I say just do it. Have someone else do it, and it makes you look more professional. If you look up someone's business and they're acting as their own registered agent, it's an indicator that it's probably a smaller company. So it's a way to kind of look bigger when you're not for a
Fair.
small fee. Mhm.
I know. So I'm based out of Wisconsin, and I just learned recently that all your information is right there for anyone to look at.
Yep.
So
Yeah,
when I
it's
first
terrible.
started my business, I started out of my house. So there's a business, my home address right there for anyone to see.
Mhm.
And it's one of those like, I didn't know that the world could see that. That's kind of
Yeah.
creepy.
Yeah. Yeah. So if someone knew the name of your company and they wanted to sue you, they'd look it up and go, oh, it's owned by this individual. And then they do a search on this individual and everything they own. Right. So yeah, that's that can be an issue.
Tell me about LLCs or multiple LLCs. I want to talk about real estate specifically. I've heard some people say get an LLC for each individual property. I've heard
Mhm.
some people say get LLCs for the region that you're in if you have real estate in multiple places and stuff like that. Tell me your take on that.
So having a bunch of LLCs, or, I'm sorry, a bunch of properties in a single LLC, so it's good in that you're not paying all these fees and doing all the tax returns on 10 different LLCs. What's bad is that if you get sued on one property and the LLC owns four properties, they can take down all four properties, right? So to save filing fees and tax stuff, if you have properties all over the country, then okay, good, you can put four or five in each one. You can do it that way, knowing that they'd be able to take them down, but at least you're separated. It's not one individual owning 30 properties across the country. And then if one gets sued, then they can take all 30. So from a legal perspective, it's better to have each property in a separate LLC so that if the bomb goes off in one LLC, it stays contained in that LLC, right? So that's my take on that. But I know people you have to weigh how comfortable you are with possibly having multiple properties taken down versus paying that extra money to have a separate LLC for each property, right? So I don't have a piece of advice there. That's an individual thing based on their comfort level. It's just important to know that if you put multiple properties under a single entity, that they can all potentially be taken down if the lawsuit is big enough. That's how the person can make the decision.
Gotcha. Fair enough.
Yeah.
Tell
Yeah.
me a story about you have multiple LLCs, bank accounts, and all that jazz. How do you recommend people doing or taking care of that? Because I imagine you got 10 LLCs. Do you have 10 bank accounts, each set up for each
You
individual
have to.
LLC?
And you absolutely have to because they can, like each LLC is a legal individual, right? You have their own EIN number and all that stuff. So you can't use a bank account for an LLC that has a different name, right? You can't deposit a check in there. They won't accept it. So each LLC legally has to have its own bank account. So yes, you do have to track that. If you're operating a business with DBAs, so let's say I have an LLC that's Augmentus Business Solutions, right? And let's say I want to do a publishing company, and I'll do like a DBA underneath it that's XYZ Publishing. So you can, some banks will let you have up to three business names on a single account. So it'd be your corporation name and then two DBAs they'll let you have. And so that way you can put all the money into the same bank account that way. But if they're separate LLCs, that's separate legal entities. They need their own bank account.
Gotcha. Piggybacking on that, you have your Nevada, Delaware, Wyoming LLC, whatever state. Are you getting a bank account in those respective states?
You don't have to. I like to get banks that are nationwide or at least in most states so that if ever I'm traveling and I have to do a banking transaction, I can. But if I have Chase is in, I think, all 50 states or 48 or something. They're in a lot of them. If I have a Wyoming company, I could open a bank account here because they have branches over there. So you can do it that way if you so choose. Yeah,
Gotcha.
I think it's better to choose a bank that is in a lot of different states and then open it for wherever it's convenient for you.
Okay. Next, I want to ask you about is LLCs. I was told about having multiple LLCs and then an LLC that owns those LLCs, where it gets kind of a tiered system. Can you talk about that?
Yeah, so that's what they call a holding company. And what that does is it provides another layer of protection between you and all the companies. So let's use the real estate example. You own 10 properties that are 10 separate LLCs. And what happens is, like you said, your information's all over the internet, right? So if you have a holding company, It does two things. One, another layer of privacy. So if someone tries to sue you in LLC number 7, property number 7, they're going to say, oh, who owns it? Oh, this LLC. It's an extra step for them to try and go see who owns the holding company, right? Doesn't stop them from finding out, but sometimes that's enough to stop someone who's lazy from going through. But it also provides another fortress. So if someone sues property number 7, they have to break through property number 7's LLC, and then they have to break through the holding company before they can come to your assets. So it adds another front line of defense. So from an asset protection standpoint and from a privacy standpoint, it can help you.
Gotcha. And typically what I've heard is people have that Wyoming LLC as the holding one, isn't it? As an example.
You can do that because they don't share a lot of information and your information is not as out there. You can still find it. But that's where you can use, one of my clients brought this to me recently, and I started offering it as a service through a partner of mine. Something called land trusts, and personal property trusts. A land trust is not like a living trust, it's completely different. It's meant solely to own a property. So if you buy a property and you put it in a land trust, it's hard for someone to figure out who owns or who benefits from a land trust. So the trustee, the person who controls the property, is public. So that could be an LLC, right? The LLC controls the property. But the beneficiary, which would be you if you own the property, is not publicly listed, and it's very hard to find out. And now the LLC can be owned by a personal property trust. You said your information's out there. If you have it owned by a personal property trust, then they're like, okay, let's see who owns this property. Oh, this weird land trust. We can't find anything out. Oh, it's controlled by this LLC. Look at the LLC. Oh, it's owned by this personal property trust. That doesn't say who owns it. So it's just a way to kind of be a ghost. And it makes it very hard for someone to come find you because you got to know who the person is to sue them, right? So it's if you use multiple layers, multiple LLCs in conjunction with land trusts and personal property trusts, you're getting privacy and asset protection in a way. Simply because it can't find you, not because the trusts provide any form of asset protection, but just in that they can't find you to sue you.
Yeah, I guess it's protection through obscurity, right? Through obscurity.
That's right. That's what it is.
Whatever. Yeah.
Own nothing, control everything, James. Own nothing and control everything.
Rule. That's the rule.
Yeah.
Tell me, just so I understand, you got this property that is held by an LLC, and then the LLC is owned by a trust?
So the property is owned by a land trust, The land trust is controlled by the LLC.
Okay.
And then the LLC is owned by the personal property trust, and you, James, would be the beneficiary of that property trust.
Gotcha. All right.
Yeah.
And that's individual trust for each piece of property.
It could be, yeah. Yeah, you could do the same trust, but yeah, I think it would be smart to do an individual trust for each property.
Gotcha.
Yeah.
It's interesting because I was just learning about the whole trust thing, and I spoke with a few attorneys, and the ones that I spoke with had no idea what I was talking about when I talked about multiple trusts. They're like, you just need one with all your stuff in it.
Yeah, and that's the thing is they're talking about a trust to avoid probate, a living trust of some kind or a revocable trust. So in that case, yes, you just need one. But there's other types of trusts that trust attorney may not be aware of, right?
Probably,
so that's probably why you got that answer. Yeah, because they specialize in that type to just pass on your assets after you pass away without while avoiding probate. So that's a different instrument for different purposes.
Fair. And I imagine those are different based on state, or is that more or less a universal thing?
It's pretty close. The law is pretty similar. I mean, there's a couple small nuances that are different in each state, but for the most part, those are all pretty much the same.
Gotcha. Let's see here. I think we hit everything. Am I missing a spot? We talked about business credit, uses, protecting assets. Just really quick, protecting assets both from the inside of the business. So somebody slips and falls on your bulldozer runs into someone or something like that. Yeah. But also the flip side, somebody slips and falls on your house. They want to take your bulldozer. Can you talk just really quick about protecting from both directions?
Yeah. So what we talked about earlier was putting the liens by lending money back and forth, right? So to reiterate that is, you get business credit, borrow from that credit line, lend it to yourself as an individual, and put a lien on your house, or you could actually put a lien on any asset really on the personal side for doing that. And then you take that money, that $300,000, if that's the amount you lend, and you lend it back to the business, and you as an individual, because you're lending that money to the business, can put liens on the assets in the business as well, right? So if you use that in conjunction with the multiple LLC strategy of owning the equipment and running it to the one that faces the public, and you have insurance, I mean, it makes it so somebody would really have to come in with a nuclear bomb to take those assets away from you. You know what I mean?
Yeah. You know, it's so interesting learning all this because I don't have any fear. I shouldn't say that. I don't have any concerns about people suing me for millions of dollars or anything. I ain't got millions of dollars.
Mm-hmm.
But I'm gonna call it a business acquaintance that I had. He knew a guy. He was a contractor. He ended up hitting some pedestrian, and this little girl ended up in the hospital. He got sued, and they won, and it was something like $25 million. This guy didn't have $25 million.
Yeah.
But it was the number that they were rewarded was astronomical, considering what happened, like break a leg kind of thing. I'm not saying it's good to run around hitting people or anything like that, but the number was like the spilled hot coffee kind of thing at McDonald's. It was like you were rewarded what? And from this guy that he didn't have that kind of money, not anywhere close.
Yeah. Mm-hmm.
So he was trying to find ways to leave the country because he figured he would have to work until he died just to pay for that thing.
Mm-hmm.
And it was one of those like, oh, because they went like he had his insurance, he had his umbrella. They blew past that. You got your $1 million insurance policy. Great. We got $24 million that we're after.
Mm-hmm.
It was insane. What this guy was under the pressure, the gun, whatever. I don't know the entire story. What I do know is that he didn't have $25 million. And every dime that he earned until he got that paid was gonna go to them. And it was just one of those like, oh my gosh. They probably sued him or went after him because they thought that he had a means of getting $25 million.
Yeah.
Somehow legally, I guess. I don't know.
Mm-hmm.
But it's just one of those like, oh yeah, I don't want to be in that position. I guess like when you're a kid, you're going to school, no one's like, hey, this is how you get a mortgage, or this is how you protect your assets.
Yeah.
This is how you reduce your tax liability.
They teach you how to be an employee in school. They don't teach you these other things that you're talking about.
Yeah.
They don't teach you about how credit works and why it's important to have it on the personal side, even. Right?
Not even a little bit. Not even.
That's why these college kids, they run up a credit card and just stop paying it. And then they realize when they go try and buy a car or a house later, they don't teach us that in school. They need to. How do checking accounts work? How do investments work? Right?
Right. It's so interesting you mentioned the credit thing because I was reading somewhere that they said as long as you have over 650 credit, blah, 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 blah. And I was thinking, who has under 650 credit? Like, how bad? In college, I messed up. I messed up because I looked at my bank account on the money machine, whatever, and I was like, oh, that's how much money I have. I was bouncing checks left and right because I had no idea. I was a moron. I don't think I ever went below 600. So I'm like, who is below that and how bad are they? Like,
yeah, that's people who are
just pay a thing.
Things are in collections, they're charged off, or they declared bankruptcy. That's like that type of situation.
It's bizarre. So stay above that because it's very tough to dig out of a hole.
Yeah, that's right. You're very right. Yeah.
So, Michael, I don't want to keep you too much longer here. Where can people find you?
So the name of our website is augmentusinc.com. So it's the word augment, US, augmentusinc.com. And they can buy my books on Amazon. Corporation and LLC Secrets has all the stuff that we talked about today in it. And also, why are we in business? It's so that we can, live the lifestyle we like. I also have a book called International Travel Secrets that you and I were discussing. Shows ways to travel to multiple countries and save money on that.
Yeah,
but those are two ways that they can interact.
They're both incredible books, I should say. Yeah, I was happy to read.
You read both?
I did.
Oh, good. Right on.
And I'm absorbing as much as I can about this whole LLC thing. And then you're right. I mean, why do we do all this? To have the freedom so you can have the fun, right? And in my case, I love to travel like you. I'm trying to catch up to all the countries you've been. I got some work to do.
Yeah.
But how about, is there Instagram or anything of that nature?
Yes, my Instagram is Corp LLC Guru. It's Corp _LLC _Guru, Corp LLC Guru. There's some videos on there with some little snippets about some of the stuff we talked about and more. So that's another place they can look.
Right on. How about YouTube?
No YouTube yet. No
All
YouTube
right,
yet,
that's
but
okay.
it's
Not
coming.
judging.
Coming soon. Coming
All
soon.
right. And then, do you want to mention the book that's going to be out?
Yes, that's right. So the book that is done being written, but still in the process of being formatted and things is called Business Rogue. And Business Rogue it's talking about all these degen system hacks that we discussed today and more. Corporation and LLC Secrets has some of the hacks. It's a complete guide. It has beginner stuff for people just starting, and it has advanced stuff for people who are already in the game. And what Business Rogue is it takes the advanced section of that book and puts it on steroids. And it goes into all this crazy land trust stuff that we talked about, all the ultimate privacy things and different investment tactics using your business. I mean, there's so much good stuff that's going to be in there. So watch for Business Rogue, probably end of 2025, beginning of 2026. That's probably about when it's going to come out. You and I will be in touch. Maybe we'll do another episode when it comes out and we'll go over some of the tactics in there if that works for you.
Oh my gosh, absolutely. I learned something. Well, I guess I got notes here. I learned 20 somethings here every time you're on the show. So I appreciate it. If I learned something, I'm presuming that the listeners did as well. So that's the important part.
No, that's great. It's always fun talking to you. We always have a great chat, both before
Yeah,
and
this
after.
is good fun.
Yeah,
This is very good fun.
Absolutely.
Michael, I appreciate you being on the show. Can you tell us the website one more time?
Yes, it's augmentusinc.com. Augmentusinc.com.
Awesome. I should ask, what is Augmentus?
It's weird. That name came to me in a dream. I woke up and it came to me, and it's like augment us. Like it's like helping businesses grow, helping people do it right. So it's augmenting us, and it just kind of fits what I do. I like it. It resonates with me.
All right. I love it. And it starts with an A, so it shows up top.
Yes,
right?
that's right. That's right.
I don't know if that's important anymore or not, but I remember back in the Yellow Pages days, you wanted your
Yeah, that's right. All those people, the AAA companies got all the business.
Yeah,
Right?
that's right. That's right. Way back in the day.
Yeah.
Well, that's funny. Thank you so much for being on the show, Michael.
Great. Thanks for having me, James. A lot of fun as always.
Yeah. This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. My name is James Kademan, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and reception services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. If you're listening or watching this on the web, if you could do us a huge favor, give it the big old thumbs up, subscribe, and of course, share it with your entrepreneurial friends. And of course, those friends that want to start a business, would like to travel. Michael's got books on that, so all good. We'd like to thank you, our wonderful listeners, as well as our guest, Michael Wedaa of Augmentus Business Solutions. Michael, the website, one more time, if you don't mind.
AugumentusInc.com.
I love it. Past episodes can be found morning, noon, and night at the podcast link found at drawincustomers.com. Thank you for joining us. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.